Hello everyone, it's me Omar Farooq. Welcome to Law of Money. Today is April 1st, 2026, a day that marks one of the most significant shifts in India's financial history. We aren't just looking at mirror tweaks, we are looking at a complete overhaul of how we earn, save, and spend. Over the next few minutes, we will break down the new financial rules that affect every Indian. Our goal is to move from confusion to clarity. So let's start. The new income tax system. The new Income Tax Act of 2025 this replaced the legacy of 1961 law. The focus here is simplicity. By reducing number of sections, streamlining the structure, the government is making it easier for you to file your own taxes without needing a fleet of consultants. While the law is simpler, the digital audit trails are much stronger. Automation is now doing the heavy lifting in identifying discriminations, so accuracy in your initial filing is more critical than ever before. The new rule, the 50% rule. Now let's look at your paycheck. The new salary structure matters that your basic salary must be at least 50% of your CTC. This effectively caps your allowance. You might notice you take home pay dip slightly, but don't panic. This is because your provident fund contribution, which are calculated on your basic pay, will rise significantly. Think of this as forced wealth creation. You are trading a bit of monthly liquidity for a much larger tax efficient retirement nest egg. Stock market changes. Trading cost. For the investors and traders, the cost of doing business has changed. We have seen a sharp hike in security transaction tax across futures and options. The regulator is nudging the retail public away from speculative gambling in F&O and towards long-term equity investing. If you are an intraday trader, you must recalibrate your break-even points. The scalping strategy, taking tiny profits on high frequency, is now much harder to sustain with this higher tax friction cost. Gold and investment updates. Even our favorite asset gold is in untouched. Sovereign gold bonds have a new role. The tax-free maturity benefit is now reserved for original buyers only. If you buy SGBs from the secondary market, you no longer get that specific tax exemption at the end. Before buying gold on the exchange, calculate the post-tax yield. Sometimes physical gold or gold ETFs might now be more competitive depending on your tax bracket. Everyday financial changes. It's the small daily leaks that often sink ship. From today, we see increased FASTag pricing and a revision in ATM and credit card fees. While costs are up, digital security has been fortified. New protocols make it much harder for phishing and SIM swapping scams to succeed. Now it's time to audit your subscription and card benefits. Many banks are devaluing reward points. Ensure you aren't paying high annual fees for benefits you no longer receive. The personal impact. What does this mean for you? We are entertaining an era of total financial transparency. The good, better long-term savings and a similar tax journey. The challenge is slight increasing the immediate cost and stricter compliance. The day of informal financial management are over. Every rupee is being tracked from the moment it enters your CTC to the moment it leaves your credit card. Efficiency is no longer optional, it is necessity. To wrap up, don't wait for a notice to arrive. Review your salary slip this month. Check your SGB purchase history and update your trading journals. The landscape has changed, but the goal remains the same. Financial freedom. Stay informed, stay compliant, and you will stay ahead financially. This is the end of this video. We had talked about new changes from April 1, 2026. Thank you for watching. Stay tuned for next video Saturday 6:30 p.m. Bye.